All right, welcome back to the Jason.Gray Show. All right, as most of you know, I'm a mortgage lender with New American Funding, and I want to go over today some different programs that are available for most people. And this is going to be a pretty long list of programs, but they're fabulous, and maybe something will catch your eye here or your listening ears in regards to some programs that are available. So let's talk about some of the programs. The most common loan program that we all are aware of is just conventional Fannie Mae, Freddie Mac loans that are available out there in the marketplace. Those require like a 3% down payment, 5% or more. Of course, you put 20% down, no mortgage insurance on that product. The second most common loan is an FHA loan, which only requires a 3.5% down payment. You do get a little break if you put 5% down. Problem behind the FHA loan is you can never eliminate mortgage insurance on that product, but they're very lenient in regards to credit, employment histories, just things that are just sort of off a little bit. I usually talk to people about that if they're having some little bit of struggles on some little aspect of their loan. The next loan is a VA loan, which is a great loan, right? You're a veteran, you served our country, I appreciate you, but you can do zero down on those loans. They only charge you an upfront funding fee, and if you are a disabled vet, they waive that VA funding fee, and they don't charge you anything monthly on that funding as a monthly basis either. It's a great loan. The next loan that I really, really like is a USDA loan. It's a zero down loan that's out in the rural areas. They're a little tight on their guidelines in regards to credit or debt to income ratios, but they're great on the credit scores. Just like FHA and VA, USDA will do a credit score down to 580 points. So that's a really great product. Now, there is another zero down program that's out there that I'm not a super fan of. It's called a down payment assistance loan. And it's usually tailored behind an FHA loan. The reason why I don't like that product is because the interest rates are super high in that product, and usually I can have the client get either gift funds or money from their 401k and help them with their down payment and roll them into a more of a traditional loan. So those are the basics there. Now let's talk about some things that are maybe the next tier down, or the next, those are not so common. So let's talk about a renovation loan. We have the renovation loans here, both the FHA and conventional styles. We do have a one-time construction loan that most people don't have access to anymore. So us and one other company I can think of in this marketplace can only do a one-time construction loan. That's where you do the whole home loan package with your builder in one transaction. Great loan. The next thing that I want to talk about is there's a bank statement loan where we take a look at the last 12 months bank statements, and then what we do is we give you a percentage of your deposits as income. So on your personal bank statements, we'll give you 70 cents on the dollar. On your business bank statements, we'll only give you 50 cents on the dollar. So that's a great program. There's a one-year tax return program. The problem behind that program is the rates are really high on that one. And because you're newly self-employed, there's a lot of risk associated with it. They will go down low on credit scores on that program too, but the rate is higher. So this is sort of like, how I say this, it's sort of like cost of doing business loan. You get into the house knowing that I'm going to refinance you when you hit the 2-year mark. So that's a good solution for you as well. We have asset depreciation loans where they take a look at your assets and we put a factor in there and we give you income based on your assets that you have. So if you've got a lot of money in the bank, that's a great program to take a look at as well. We do the reverse mortgages. I refer them out to a team member here at New American Funding. She takes care of it all. That's a great loan. They require a large equity stake in the property, but you don't have to make a monthly payment. So if you're 62 years or older, that might be a great solution for you. We do have some non-conforming loans, so if you got really low credit scores, there's some options out there for you. There is a loan program out there that if you get a certain amount in rent and you put a certain amount of money down, we don't look at any income docs. That's very back to like the olden days a little bit, right? One thing that we can do as well is on most of our loan programs, we can do the 2-1 buy downs, the 3-2-1 buy downs. Those are available to layer onto those to lower the payments. In this marketplace, you can be a little more aggressive with your offers. So negotiating closing costs and prepays is a good thing to do. But that's just a basic overview of a lot of the products that we have here at New American Funding. If you have any questions, comments, you have a particular situation that you need help on, just a reminder, I've been doing this 29 years. If you're calling me from a state I'm not licensed in, I'll refer you out to someone in my corporate office who can help you on our interstate lending division team. But feel free to reach out to me, bounce some ideas off me, and I'll try to help you out as much as I possibly can. All right. Thank you very much. Talk to you soon. Bye-bye.